All right, guys. Good morning. Good morning. Hope you guys are doing well today. Let me know if you can hear everything good. We should be pretty good sound-wise, I think. Let's see what the market gives us. Hopefully we get some good stuff here. Nvidia's dipping down a little bit today. It's at 132s. We got Palantir at 122s. Oil down to $60 a barrel. Apple's still sitting at 202s. Amazon over 200s. Meta at 630s. Google at 170. So Google's done a pretty good time. Microsoft all the way up to 450s. So good morning, chat. Hope you guys are doing good today. So Google's done a pretty good. Let's do a poll. We got jobless claims unemployment today. This jobless claims come in higher or lower than the what's expected today. Than the 230 expected. 230,000 jobless claims expected. Chat. Higher, lower. So you love to see this trade because we are in a position here, and yeah, we just made a little bit on our funded account. I'll take it. Green is good. Green is good. Kind of choppy morning though, most of this morning, but hey, that's how it goes. Again, higher, lower, as expected, are going to be the three options. Yeah, so we did get a bill passed. So this morning, the House Reps passed a major reconciliation bill. Yesterday we had bond yields spike at about 1 a.m. yesterday. At about 1 p.m. yesterday, bond yields spiked. You can see the spike in bond yields about right here. They went up a lot all day yesterday, but they definitely spiked again at 1. This was mostly due to disappointing 20-year Treasury auction. So the U.S. Treasury $16 billion auction of 20-year bonds saw a pretty small demand, resulting in a yield of 4+% or 5+% for a little while, the highest since October of 2023. It signaled waning investor, interest for long-term government bonds, prompting a sell-off in Treasuries, pushing yields higher across a lot of different areas. So yeah, 20-year hit over 5%. It spiked yields everywhere, basically. People are still kind of worried about the Moody's thing. We got inflationary pressure from tariffs and all that stuff. And they did pass the bill. This was... But yeah, you can see bond yields pretty freaking high right now. Where's my coffee? I got one of my favorite mugs. Yeah, so it looks like the big, beautiful Bill Act was passed. All right, so it didn't pass fully, but it passes in the House vote. This is a reconciliation bill, so it's a type of legislation in Congress used to expedite passage of it and budget-related stuff. It can't be filibustered by the Senate. It needs 51 votes. House of Reps passed it, likely to include adjustments, salt tax stuff. Let's see what it includes. It includes big tax cuts. JP Morgan CEO Jamie Dimon has expressed concerns about the U.S. economy facing stagflation. And this is something I said yesterday. Stagflation environment is what it seems like we're in right now. It's caused some worries about increasing federal deficits and inflationary pressure. Stagnant growth and persistent inflation, citing factors like the ongoing trade tension and fiscal imbalance. Japan downgraded its global economic outlook. Market was kind of crazy yesterday, though. If we take a look at the market yesterday, I can zoom out here on the NASDAQ. Market was kind of out there. Let me put just the NASDAQ up, and I'm going to maybe remove all these lines. There we go. But the market was kind of out there yesterday. Big upward move and then a big drop, you know, around 1 o'clock yesterday from the bond auction news. That thing tanked the market too, man. Interesting. Ran up and then boom, big drop. So, and then we've basically been sideways since. Like, look how sideways the market has been since then, dude. So the market has been very sideways since then. Kind of a small upward trend, though, is what we've been in. Again, here's current 10-year yields currently at 4.6%, 4.6%. We could take a look at gold. Gold all the way down to 32.80s this morning. But yesterday, the bond auction came out. Where was it? Right here. Tanked gold as well, even. It looks like, or no, this was at 7 a.m. So the bond auction showed up. I think the bond auction showed up here. And honestly, it spiked gold, it looks like. Yeah, we got Palantir dipping down some. It's at 122s right now, 122s. Let's see what we get. Bond yields and equities can sometimes parallel each other. Bond yields and equities inverse each other in a way, but it's kind of hard. Like, so it depends. It's definitely more nuanced. Wait. So let me do the correlation in my head. So bond yields go up as bond prices go down. As bond prices go down, sometimes stock prices go up, right? And so actually, they parallel each other in some ways, but they're not a perfect correlation, you know. Sorry, I had to kind of think about the correlations there. Like, bonds are seen as risk-off instruments for markets, right? So, like, people gravitate towards bonds when they're skeptical of the stock market. If people are confident in the stock market, they don't buy bonds as much, you know. But there's a lot of reasons. You know, there's a lot of correlations, but they're not always perfect with stuff like this. Yeah, bond yields spiking up is seen more of a sign of worry right now, I'm pretty sure. So when bond yields rise, stock prices actually fall, especially for growth and tech stocks. Higher yields means higher borrowing costs for companies, discounted cash flow models, and safe haven appeal. So yeah, they inverse each other. I got it backwards. Or no, I said that right. I said they inverse each other. Maybe I didn't. Yeah, so the most common is an inverse correlation, but it varies. There's also a positive correlation in some environments. Stocks and yields can rise together, such as strong economic growth expectations. So it's kind of, you know, it's not a super consistent correlation, I guess is the easiest way to put it. Yeah, so lately stocks and yields have been rising together. It's one of the weird things. Like, stocks have been bouncing back, but yields have been going up with us. So yeah, Bitcoin broke all-time highs yesterday. It's currently sitting at about 110s, like right around all-time highs. Got up to 112,000 in futures for Bitcoin. That's definitely a reflection of that recently, Moody. So CT, so bond yields are going up recently for a lot of reasons. The bond auction happened with waning demand yesterday. That made bond yields spike and the price of the underlying bonds go down. Moody's is also tanking the price of bonds, which makes yields go up because Moody's giving the U.S. not the best rating, like one step under the best. I think I can't remember. It's like AAA something. It's AA something for that they're giving the U.S. I can't remember. It's like AA something. They call it something different than like Fitch or S&P, where they call it AA plus, right? But yeah, they're giving the U.S. basically AA plus instead of the top rating now, and that made people lose interest in bonds. That made people worried about bonds a little bit more than normal. It probably contributed to the worst bond auction that we had yesterday. And all of this stuff is meaning yields are spiking up. You know, the 20-year bond auction was yesterday. Yields were over 5% at one point in time. The 10-year treasury yields are currently over 4.6% right now. They're at 4.62% basically. So, hey, thank you, Jason. Appreciate it, bro. Yeah, the market is very flat right now, though. Very sideways, very choppy. I'm waiting to see if it breaks out of this trend, but it's just so flat, so choppy right now. Not doing anything really good. See if we get anything better in markets right now. But it's been so flat and so kind of choppy right now. You're slightly green on the day, somehow. Weird dreams, man. I can remember some of my dreams yesterday. Very strange dreams. So we're still dipping down some here. Let's see if we hold. We're very choppy right now, though. Like the market's going up big and down big and up big and down big. Big range on the upside and downside, but still watching bond yields. They dipped down a little bit here. Yeah, we also had some other big news. Like, let's take a look at it. We talked about the biggest news stories today. Let's see what it was. Talked about bond yields. Okay, so yeah, stock futures showing limited movement following big decline in indices yesterday. Dow Jones dropped 2%. Weak 20-year treasury bond auction heightened concern over national fiscal health. Bitcoin breaking all-time highs, which is good. The House of Reps passed the big beautiful bill, which included significant tax cuts. This has intensified worried about increasing federal deficits. JP Morgan has expressed stagflation concerns here. So yeah, JP Morgan worried about stagflation in this market. Well, JP Morgan. Yeah, JP Morgan worried about stagflation here, chat. You know, again, stagflation is this very unique thing where it essentially means that the U.S. is in a market that fears economic weakness as well as inflation. So it's kind of the worst of both sides, if that makes sense. Yeah, we got jobless claims unemployment today. I'm trading micros recently because the market. I actually ended green yesterday in my funded account, just to clarify. We're green today also. Like we took a couple trades after the bell. I haven't been doing great after the bell. I've had to wait, but we did end green yesterday. But yeah, so let me get the timer up. So we got jobless claims unemployment filings going live in about an hour. We got 50. Yeah, that's about right. We have about 57 minutes left. 57 minutes. I'll put that up right there. Jobless claims unemployment report 8:30 Eastern Standard Time. What's up, Vegas? All right, guys. And again, we'll see what we get. I'm excited for the day. We finally got some economic reports to cover because it's been boring, man. Like, we have not had a lot of stuff go on. Like, it has been very, very light, very, very limited, very, very boring. Next week's much busier. We got NVIDIA earnings. Today, we've got jobless claims at 8:30. We've got flash services and manufacturing data at 9:45. We got existing home sales at 10. And then we got Powell this Sunday. And then next week, remember, Monday is mostly closed. It's Memorial Day next week, so it's mostly closed. And then we got a whole bunch of stuff. We got NVIDIA, Fed minutes report, jobless claims, GDP, PCE data, consumer sentiment from Michigan, durable goods, Case-Shiller house price index, consumer confidence data. Like, we got a whole bunch of stuff next week. And then the week after that, I'm pretty sure, is very busy also. The first week of June. Let me make sure. Yeah, June. We got JOLTS. Okay. Yeah, so basically, the next week we got a whole bunch of stuff too. Payrolls, non-farm payrolls, unemployment, non-farm payroll, non-farm employment change data, ISM services data, JOLTS job report, and more. ECB decision next on June 5th. All right, so we're about at the bottom of this really bad, like, part of me wants to buy this personally, but I think I'm just gonna wait. Like, we're so choppy right now. Maybe we break out of this range, but it's so flat, it's so boring, it's so choppy. Do you guys think you buy the bottom in this range? Again, the bond yield's scaring people. Again, we got about 45 minutes. We're at the bottom of this range. So we did have the Google I/O 25. Google unveiled a lot of stuff and advancements with AI integration. They debuted AI mode in Google search. It transforms traditional search queries into conversational interactions, providing more intuitive and comprehensive responses. It leverages the capabilities of Gemini. It has deep search and search live for complex queries. It offers in-depth research capabilities. They talked about Gemini 2.5 and Flash and Gemini Live. Features integrated voice, camera, and web data to facilitate real-time intelligence task execution, which I really like, because that basically means I can sit here and bark orders at it and it will follow through with those orders, which is a cool thing. Generative media tools. So they have VO3, which is advanced video generation model capable of producing clips with synchronized audio and lip movement, pushing the boundaries. Flow, which is a professional grade AI tool that combines the strengths of VO, Imagen, and Gemini to assist in creating detailed audiovisual content from small, simple descriptions. We have Imagen 4, which is image generation. Android is putting out some smart glasses with Android XR and smart glasses. They have Stitch, an AI-powered tool to streamline app design and developments by converting natural language descriptions or image prompts into high-quality UI designs. AI Ultra Plan, premium subscription service at $250 a month, offering access to advanced AI tools including Gemini 2.5 Pro, DeepThink, and Flow. So a lot of cool stuff at the I/O event. Do you buy this dip right here, chat? Do you buy this dip? We're at the very bottom of the range. I think a dip buy kind of makes sense. We'll see if we bounce. No trades for me today. What's up, Pawn? Yeah, 10-year yield's popping up. Yeah, so yeah, a lot of stuff. Rip it up. Bond yields rip it up mostly today. Scared markets. The bond auction tanked everything yesterday. Like everything dropped yesterday on the bond yield or the bond auction with waning kind of small demand is what happened. So much less demand than expected at the bond auction yesterday. So we'll see, but. Yes, we are dipping down a little bit here. We just cracked this low of this opening range. Maybe we'll get some volatility today. It looks a little weak. We got Palantir breaking down to 121s right now. So we got time. We got time. Yeah, y'all check out our Discord. Completely free, doesn't cost anything. Pawn posted in the chat. We appreciate it. Let me open that up right now. Sailor said, quote, "No one has ever lost money buying Bitcoin." He said it may not be strictly true, but the big rise of the crypto continues and the milestone keeps coming. Bitcoin's all-time high of 111 overnight trading Thursday, taking its rally past 18%. Nike reportedly increasing prices by up to 7% in price hikes. Humana, UNH stocks fall. Medicare crackdown is kind of driving it down. Walmart is reportedly cutting costs to lower, cutting jobs to lower costs. Yeah. We'll see what happens. I think the 10-year going up, Wesley, is from a number of different things. Specifically, it's mostly from a little bit of both. So Friday, we had Moody's downgrading the U.S. credit. Now, this is bad for bond yields because it means that bonds are going to get sold off because they got downgraded. Now that popped bond yields up some over the weekend, and then last trading day, yesterday afternoon at 1 o'clock, we had a 20-year bond auction, and it came in weak for interest, and so that propelled bond yields even higher to where they are now at over 4.6% right now. If we look at treasury yields, 10-year treasuries are at 4.6%, as you can kind of see here. And most of this move was at 1 o'clock yesterday, which is when the bond auction was. So the bond auction yesterday came through kind of weak, showing bad demand, and that drove yields even higher, currently over 4.6% for 10-year. So that is what's going on right now. We'll see if it holds, but that is kind of what we got right here. See if markets break out of this trend or if they actually do anything here. Yeah, look at this big downfall here. Interesting. Yeah, I'm looking at we've had choppiness since the bond auction. So if you look at the NASDAQ, we are incredibly choppy, incredibly flat, incredibly boring. Not super interesting right now. There's not a lot of good looks here in markets. Look at these drops. As I say that, maybe we're going to get something cool now. But I think we also kind of have mixed results here. We got the big beautiful bill passing, which could stimulate things. Like, we'll see. You know, it's hard to read. It's hard to gauge this. Big retracement back up. And we're still heading up. Look at that pop. Again, I tend to think, like, one thing that I'm seeing here is that we got this big range. Like, look, so here's the whole rectangular pattern today. It's mostly, like, sitting like this, though. Like, the range is mostly like this. You know, so we are basically in this little flat range. Although it's gotten as high as this area here. We're now at the very bottom of the range, and so you might be able to buy it, but it's not really predictable, I think, here. We also have the Japanese economy minister Akazawa is going to visit the U.S. from Friday until Sunday for tariff negotiations. So we might have some more good tariff news over the weekend. So that could be going on right now. And so that's something to watch for this weekend, is maybe some tariff news with Japan. I'm not saying they're going to, but we did add some of the ECB accounts this morning. They said increased confidence that inflation would return to target in line with March projections. Members attached a higher probability to the possibility that the trade shock would be inflationary beyond short term. A cut at the present meeting could be seen as front-loading and uncertainty. The appreciation of the euro and the decline in oil and gas prices would dampen in the inflation outlook in near term. It's pointed to upside risk to inflation in the medium to long term. A few members noted that they could have felt comfortable with a 50 basis cut. Market-based indicators pointed to a tightening of fiscal conditions. Wanted to avoid the perception of the neutral level of interest rates was the end of the current cycle. Disinflation to dominate in short term due to the euro. And inflation was expected to hover close to the target of 2% for the remainder of this year. So we'll see what that looks like. It all depends on geopolitical stuff, tariff news, economic policy. So we'll see what that looks like. Well, I'm definitely not an expert. I don't even know what an expert is. You know, this is my disclaimer. With that said, let's put it up. Remember, I am terrible, potentially terrible. I might be good. Have no idea what I'm talking about. May be wildly wrong about anything I say. It's entertainment only. Experience wins or losses may be done off stream. Sometimes I might lose off stream and not tell you about it. That's true. Do not copy me. Understand CFTC 4.41. Understand all the stuff on screen. I can't guarantee anything. Not an investment. Professional. Market broke lows, though. The bottom of this range. Let's see if it continues down. Hey, thank you, Bonk. I appreciate you, brother. Thank you, sir. Bitcoin flying up over all-time highs. Oil back down to $60 a share. GameStop, I see some people mentioning it. It's been sitting in the mid to high 20s for a long time now. It's kind of getting boring, in all honesty. It depends, Eli. So he said, does the jobless claims impact things? They definitely impact things. Typically, they move stuff. The reason they move things is because the jobless claims report is a week-to-week report. It's not as lagging as a lot of other reports, where jobless claims unemployment is a week-to-week report, meaning it's more up-to-date in recent data than a lot of other reports that we cover here. So because of that, the jobless claims report every Thursday is a relevant report that we want to pay attention to. Jobless claims is how many people are filing for unemployment. So they're claiming to be jobless. They're filing for unemployment. That's what it is. And it drops every Thursday. We'll cover it today. It's expected at 230,000. I'll put this up on screen, but All right, so we'll put this up on screen so you guys can really kind of see what's going on. There we go. We'll put the timer up a tad bit here, so you can still watch what's going on. And I mean, the NASDAQ looks weak, but it's also at the bottom of a range here, right? So like, here's the argument on both sides. We have broken underneath all of these lows that we've seen most of today. So we broke under the lows of today here. And so maybe we get more downward pressure. It's possible for sure. We also are at the very bottom of this long-term range though. And so we're now at the bottom of it. And so you could also argue, if we're going to continue the trend, that it's a choppy sideways trend, we might rebound back up. Honestly, I think both of them make sense. Because of that, I'm just going to sit tight. I'm not going to take anything. And it looks like we're kind of breaking down. The trend is definitely showed to be kind of negative as of now. That's a big drop. Yeah, it's a big drop. We're slightly green on the day, so we've made a little bit. Market's still kind of consolidating down here at these lows. Gold, on the other hand, if we take a look at it, gold's rebounding back up some after these drops. So we're starting to see a little bit of weakness. Using gold as kind of a guide. We got a nice little retracement back up here, though. So, I mean, we got something. Big red candle here. Let me see if there's any news. ECB members a few minutes noted that could have felt comfortable with 50 basis point cuts. This red showing up here. Still dropping. Again, Palantir's fallen down some here. Amazon, a lot of blue chips are kind of dipping down some as we look at this. Meta's honestly pretty flat. Google had a pretty good overnight day, but it's still dropping recently. Netflix, Nvidia, probably one of the big ones we want to watch. Nvidia all the way down to 132s. NASDAQ still falling quick. Nvidia popped back up some here. Let's see if it holds. I am watching like Nvidia pretty closely as we speak. Here's Nvidia. Oh, all right. Still testing these lows. We're starting to look weak this morning for sure, though. So at least I'm honestly happy with that because at least it gives us somewhat of a trend that we're following here. So like at least it gives us something here. Like I would rather us have some type of momentum And at this point, it looks like we're past the bottom of that range, so it does look weak here. We'll see if we get a rebound back up, and we'll short into it if we get something. But we got to wait for it. All right, so we're rebounding back up some. Again, if we get a bounce back, I'm looking at levels here. Let's draw some. If we get a bounce back, I'd probably do 75 right here, to be honest. But I'd also probably look at like 50 right here. We get a bounce back to 50. I'll try a short-term short on this. But we need a bounce back all the way to there. And this is too steep of a downward push to just kind of jump in short. I'm just not really hyper interested in that. We got the Fed Waller speaking right now. He says markets are monitoring fiscal policy with concerns and looking for greater fiscal discipline. So that is going on right now. I'll put that link up. Hey, thank you for the donations. I'm looking at this now. Hold on. Okay, district. Please stop spamming, bro. Night Warrior, thank you for the donation. Are you buying SPY calls today? No, I'm not a big options buyer. I'm usually future stocks. So yeah, I'm usually future stocks personally. MicroStrategy, but I appreciate the donations. Thanks so much. I do have a Discord. It's completely free. It doesn't cost anything. Yeah, Bitcoin's still sitting over 111, but here's some news I just dropped about the Fed's Waller. But thank you for the donation, Dirt Bike guy. I appreciate it. Thank you. All right, so we are getting a rebound. Again, if we get one to that 1150 level, we'll take that. Checking a couple different things. Okay. All right, we got up to 40s. Nvidia bouncing at 132s as well. We need that 150 level, though, for me to get interested. Again, MicroStrategy files for an offering of up to $2.1 billion of 10% Series A perpetual Strife preferred stock via SEC filing. Yeah, I mean, we've been pretty weak recently, over the last 10 minutes or so. All right, guys. U.S. House Speaker Johnson says he's going to talk to the president. Everyone, he said, Fed's Waller also said everyone in markets expected more fiscal restraint from tax bill. He said he's much more optimistic now relative to last month on tariffs. Firms are pausing but not canceling plans, and they continue to believe tariffs will be a one-time price increase. Standard Fed playbook is to look through one-time price increase. Look at this drop right now in markets, guys. So look at the NASDAQ dip down. We're at 100, basically here, 105s right now, with a big drop. Let's see if we can find a reason. Look at this. This usually is reason driven, no catalyst driven. We'll see if we get some stock news or something that comes out right now, because something just tanked markets. Look at this drop. I wanted to bounce up to 50. We got to bounce up to like 42, so I didn't quite get it. That's all right. We'll wait for a good trade. Look at this red. Something just happened. I'm waiting to see what it is, chat, so bear with me here. But something just happened for sure. And it doesn't look small, whatever this was. Yikes. Treasury block trades. Treasury bond futures. Bought 3K 10-year and T-notes. Is this a bond auction that we had this morning? Yeah, potentially. Let me make sure. I think it's a bond auction that just happened, but let me make sure. Bank of England members speaking. We had Mexico stuff going on, but look at that drop. I think this is a bond auction, but I'm not 100% sure. Yeah, this showed up at 7:56 market time. Yeah. Okay, so that's what this was. So weak treasury bond auction again. You can kind of see bond yields get even higher on this news. Like, look. So this is a 10-year auction. Bought 3,000 10-year T-notes at 109.18 versus sold 2,000. Treasury bond futures at 110.260 according to the CME. Look at yields spike up again, guys. So yields are up even higher right now. They are at 4.62%. 4.62%. The NASDAQ is dumping down quick here. Yikes. Ralph Lauren put out some earnings also. Unless there's something else I'm missing here. Yeah, well, yesterday was the 20-year. I don't know. This might be a different old news release. We got a little rebound from this, though. Markets are coming back up a little bit. We now have 28 minutes until the jobless claims unemployment filings report. So this looks like it's mostly Amazon, Nvidia, Microsoft, Meta all dropping pretty big. Outside of that, there's not really any big like story. Microsoft was also downgraded some this morning, but yeah, this looks weak. Here's 100 right here, which it might be a little too late to target it. If we get a bounce back up, maybe we can try to catch it, but it's also a retest, so. We'll wait, actually. We had Mexico GDP show up also. All right, there's a follow through dip. Nice. Look at that 100 rejection. Bond yield spiking up there now at 4.621%. 4.621%. Chat. That's high. All right, so let's watch this 21.1 level. I mean, we've been looking at it all morning. All right, so we're still testing that 21.1 level here. We're basically right at it, rejecting it a little bit. Nvidia all the way down to 131s. Palantir did bounce at the previous closing price, though. Yeah, so at 6:56 Eastern time. Was it Eastern? Yeah. We had some big orders go up. Bond prices spiked. Again, some funds may be preparing for higher long-term yields, bearish for 30-year bonds. Some block orders went out. We're now over that 21.1 level. Again, we got jobless claims unemployment filings dropping in 25 minutes here, chat. 25 minutes. Let me know if you're optimistic for it. Looking at our poll numbers, 47% think higher, 31% think lower, 21% think as expected. Yeah, so yesterday, just to clarify why bond yields are up so much over the last 24 hours. Yesterday, we had the 20-year Treasury bond auction, showed weak demand for Treasuries. That made yields spike because bond prices and bond yields inverse each other. And so if we have weak demand for bonds and prices go down, what does that do to yields? It makes yields spike, which is what we've seen over the last 24 hours. This was really about 1 o'clock yesterday was the 20-year bond auction. We're seeing the effects of that all throughout this morning, right? So again, lower bond prices means higher yields, and currently we got yields spiking up. They hit 6.2% this morning. They're at 4.61% right now. They hit 4.62%. I mean, this morning, and so yeah, that is what's going on. This mixed with like the Moody's news, which tanked the bond markets and spiked yields as well over the weekend. Bond yields are getting pretty up there. And again, today in about 20 minutes, really, we've got the jobless claims unemployment filings report, which signals unemployment filings week to week. It's a relevant report. It's expected today at 230,000. All right, so we're still rebounding up, following through on the upside a little bit more here, chat. So we are looking a little better here. All right, so we're back up there. I kind of want to short this, but I think I'm going to wait. If we get up to like 1150, I might short it. All right, guys, so still rebounding back up, still watching, waiting for some good strategies to get involved with anything, but we've had some big dips. All right, so look at this drop here. If we get a retracement back up to this level, we will short it again, but we need a retracement back up there. I'm gonna kind of wait for that. I think that's what I want. I want a retracement back up to 1. I doubt they're gonna make it easy on me and give me that, but we'll see. Can't guarantee anything though, not an investment professional. Let's see if we get the little pop back up. Yeah, we didn't really get it. Nvidia rejected the previous closing price at about 131.80, so very close to hitting that level here. Okay, we got about 1,000 viewers. We still got 20 minutes until this jobless claims unemployment filing report comes out. 8 a.m. algos dipping the market. Yeah, maybe. Yeah, the big beautiful bill was passed. Powell's going to be speaking on Sunday. I was overconfident in lower prices, got in a bad position. So what crashed the market yesterday? What crashed the market yesterday was the 20-year bond auction that happened at 1 o'clock in the afternoon yesterday. If we look at markets throughout that time frame, here's 1 o'clock. You can see this drop right here. This is 1 o'clock yesterday. What dropped it was a 20-year bond auction tanking markets. The reason it tanked markets is because bonds came in with weak demand. Like they had a really weak demand for the 20-year Treasury bonds, and this spiked yields and decreased the price of a lot of bonds because of sympathy and you know. So. All right, still breaking lows here, guys. We're down to 67s here, leading into jobless claims. NVIDIA cracked the low. I think this is the low of the day. Yeah, NVIDIA cracked the low of the day just now as well. It hit 131.30s now. Palantir also breaking under the previous closing price. It's technically red as we speak here. So markets are falling. I wanted to pop up to 100. I figured they weren't going to make it easy on me there, but that's okay. We'll wait. Try to find some good stuff. All right, so we bounced up a little bit after cracking lows. I'd probably be interested in shorting this 21.1 level again, but I gotta wait. Are you guys red or green so far today, chat? Let me know. Where's Tesla? Somebody's talking about Tesla. Is it Tesla dropping? Let me see. Yeah, I mean, Tesla's kind of following the rest of the market, but Tesla does look a little bit steeper than some of the other stocks. Let me take a look at and see if we got any breaking news for Tesla here. Okay, so BYD's Europe pivot in full swing. 26,000 affordable EV amid Tesla sales slump. Yeah, I mean, we got some bad news with BYD doing a affordable EV move. So Tesla's down a little bit, down to 320s. NASDAQ just cracked lows again. I'm still looking at 21.1s, though. 15 minutes, chat. We got about 1,100 viewers here. Hit the subscribe button. Hit the notification bell. We appreciate the love. Thanks so much. Also, guys, check out TopStep. TopStep gives you a 50K demo. They test your skill with a demo account. It's the best way to learn. I only have one sponsor. I don't sell a course. I don't sell a service. I don't even claim to be a good trader. What I do think is that almost all day traders lose their first few accounts. They lose for the first year or two, usually. This is almost always true, unless you get really lucky. And so it makes no sense to fund your own account thousands of dollars just to give it back to the market in the beginning. Absolutely no sense. Instead, using something like this can limit your risk. You're still probably going to lose. Frankly, it's a lot cheaper to lose here. If you pass it, the reward's pretty similar to funding your own account anyway. And so you got a limited risk, similar reward. And they pay out hundreds of millions. They fund thousands. They give you a 50K demo for the base one. There's also a $100 one and a $150 one, which is 100K and 150K. If you can make 3K in profit on the 50K one without losing 2K first, following their rules, they fund you 50K, 90% split. And prior to that split kicking in, you get to keep your first 10K in profit. Very similar reward to funding your own account. If you fail, you're out 50 bucks. It's not the end of the world. It's best of both worlds, in my opinion. And if you use my link and go to TopStepX, 0 commission, tiny amount of fees per trade, making the edge even bigger. And again, they're the most legit one in the world. It just makes sense. If you want to check it out, I'll put the link up. It's a great way to help support the channel, although I am very biased, of course, in their favor because I get paid by them. But genuinely think it's good for new traders. And I think if you make new traders fund their own accounts, they're going to lose so much more in the beginning. Learning how to trade in a structured environment just makes sense. So if you want to check it out, here's the link. I'll pin it to the top of the chat as well. Again, a great way to help support the channel. NASDAQ cracking lows all the way down to 2150 here, chat. 2150s. Big drop. Big breakdown. The VIX, I'm sure, is spiking up right now. Tesla's down pretty big. The VIX is up to over almost 22 here. Look at the VIX spike. Bond yields, which are very, you can kind of use them sometimes like a VIX. But bond yields spiking up even more here, Chad. So they're back up to almost highs at 4.62%. NASDAQ's breaking down, looking weak. Yeah. Fear in markets right now. All right, so the U.S. 5 to 30-year curve steepens to 100 basis points. We had Mexico GDP show up at 0.8% as expected, 0.2% SA as expected. Nominal quarter 3, 7.7 versus 6.1. The SOFR rate showed up about 20 minutes ago at 4.26% versus 4.27% May 20th. Again, we had the Fed's Waller saying some stuff, but the real reason, again, bond prices. 20-year Treasury bond yesterday tanked everything, dropped markets substantially. Yeah. Tesla dipping down some. on maybe BYD getting into affordable EVs and following through with it. All right, so the Safran CEO says commercial aircraft production remains limited by supply chain problems. We had some stuff going on. Mercedes-Benz is going to open up in Atlanta as its North American headquarters. All right, chat, we got 10 minutes left until the jobless claims report. Meta's down pretty big. Nvidia's dropped all the way down to under 130s. The VIX has spiked up to 22. Nvidia is now technically red on the day, as is most tech stocks as of now. Most Mag 7 tech stocks are now effectively red on the day. Again, jobless claims unemployment expected today at 230K. Drops in about 10 minutes. 230. Tesla, Bitcoin. Yeah, Bitcoin's been breaking all-time highs. It's up to 111.5 in Bitcoin futures. The all-time highs at currently 112 or so for Bitcoin futures or Bitcoin. Again, we're still watching Treasury yields. They're still at 4.61%, but they're looking a little scary right now. I'll put it that way. They're looking a little scary. Again, we got 9 minutes left. Jobless claims unemployment. And then at 9:45, we also have manufacturing and services flash PMI data. So we got some stuff going on. Seeing some rebounds and some stuff. I wouldn't mind shorting this 21.1 level, though. Still got 8 minutes left. It can move markets. Does MicroStrategy nosedive if Bitcoin drops? Yeah, it depends on how much, though. I mean, like, look, drops in Bitcoin are not gonna like. It has to. If Bitcoin drops big, MicroStrategy's going down with it. And so why? Because MicroStrategy is made up of Bitcoin. Like that's what the company is. It's a Bitcoin symbol. All right, chat. We've got about 7.5 minutes left. 7.5 minutes. Yeah, the bond prices, again, Moody's over the weekend. And Moody's was only there's 3 major credit rating agencies rating the U.S. One of them is S&P from S&P 500, Standard & Poor's. Another one is Fitch, okay? In 2011, S&P downgraded the U.S. credit rating from AAA to AA+. Okay, it's still a good rating, but it's not the best. And in 2023, 2 years ago, Fitch did the same thing. Reduced it from AAA to AA+, citing fiscal concerns, lack of trust. And so it's not a shock to finally see Moody's, which was the last holdout there, downgrading the U.S. credit rating agency, credit rating. It's not a shock, right? But over the weekend, it still negatively impacted the bond market enough to drive yields up, right? Like when we get sell-offs in bonds, here's an important correlation to understand. When we get sell-offs in bonds, yields spike, okay? Because it's supply and demand. If one goes up, the other one must go down. Supply and demand. That's not what supply and demand means, but it's because of supply and demand, just to clarify. Now, we had the Moody's news over the weekend. Markets have been a little weird, in my opinion. We spiked up yesterday prior to this, but then we had the 20-year bond auction yesterday at 1 o'clock. At 1 o'clock yesterday, we had the 20-year bond auction, and it came in weak. You know, it came in waning interest in 20-year bonds, which, again, made the bond prices fall and the underlying yields spike, right? And that is where we're at now, basically, with the 10-year Treasury yield, which is the one I like looking at, hitting highs right now at 6.21%. So this is what's going on in markets. Yield spiking is also a reflection of stock prices falling as of now, but it's certainly a little bit more nuanced there. Does your trading provide your main source of income? No. Of course not. No. I never claim it does. I'm just, you know, we like my channel is mostly economic reports, data. We watch markets. If you want to know if something's going on in markets, you can subscribe and you know we're going to cover it. You know we're going to follow it. That's what this is. And I appreciate the love. I appreciate the support. I really do. I'd rather just be honest about it, you know. And that's the truth, right? Of course, I'm not living off of I wish I was, but yeah. The underlying truth of almost everybody is that they make more money marketing than they do from trading, and this is objectively true. You can't really knock people for it though, because yeah, that's gonna be how it goes, you know. All right, guys, we got 4.5 minutes left. 4.5 minutes. All right, guys, NVIDIA coming down to 131s. Palantir technically red as well. I'm going to put gold up here. And then I'm going to put TNX to see if it's open yet. Is this open yet? Hold on. TNX. Yeah, it's open. So look at TNX spike. So this is bond yields on the top right. So these go up as bond yields go up. This goes down if bond yields go down. So this bond yields on the top right. We have gold on the bottom right. We have the NASDAQ 100 here, which I'm going to put a full screen chart up. Here. So we can watch this. But you can kind of see we've had a pretty big downfall. Actually, I'm going to put micros up because I have some levels on micros. We've had a pretty big downfall the last few minutes. But we're watching things. I'm looking at... I'm looking at 1100 right here. I do like 1100. Or 21 ones, I mean, give or take. But yeah, things are down. We have 3 minutes left, chat. 3 minutes. Subscribe. Hit the notification bell. I appreciate the love. Thanks so much. Again, 3 minutes. Exactly 3 minutes. Market's kind of going sideways leading into this report, chat. So it might move the market. We'll see. Typically, it moves it a little bit at least. Sometimes it moves it a lot. It depends on what the numbers are. All right, guys. Again, we got bond yields on the top right. I'm going to scoop this up here. Let me get rid of this top one so it's cleaner. And yeah, 2.5 minutes. 2.5 minutes. Yeah, I mean, we could look at the VIX too. I like to look at the VIX is up to over 22s. I like looking at gold and then yields on the right. Top right chart is yields. This is gold. This is the NASDAQ 100. All right, guys, we got a minute and 80 seconds left. Or, I'm sorry, we got a minute and 30 seconds left. Again, sub, hit the notification bell. I appreciate the love. Let's see what we get for jobless claims unemployment filings today, 8:30. We got very little time left. All right, here we go. A minute and 15. Minute and 15. It's expected at 230K. It might be right below you. Right here. Actually, it's not right below you. My bad. My apologies. It's expected at 230,000 today, chat. 230K is what this is expected at this morning. So we will see 230,000. We have exactly 1 minute left. Exactly 1 minute left. Again, 230,000 is what's expected. Last time it showed up at 229. Again, 230,000. Last time it showed up at 239 or 229. All right, guys, here we go. Jobless claims expected at 230. 25 seconds. I'm going to pause this timer. It's a little bit early, so I'm going to pause it. 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream, because if you're not live, it'll be delayed. So you can put it in 2x speed, but make sure you hit the live button next to the play button. It'll catch you up. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, and 1. Here's a report. Okay, guys, so we did have the Chicago Fed National Activity Index that should have been minus 25. Jobless claims haven't showed up yet. There's jobless claims, 227, lower than expected jobless claims, higher than expected continuing, but lower than expected jobless claims. They showed up at 227 versus 230 expected. 227 versus 230, lower than expected. What this means is less people filing for unemployment week to week. A little bit stronger economy is what this means. It means less people filing for unemployment week to week. Let's see what bond yields are doing. Honestly, we've got initially a positive reaction here. It's not a huge reaction based off of, but the volatility today is going to kind of skew the reaction here. But we did get a move up. Look at this reaction. We got something here. We're back up to, look at this green candle. So again, lower than expected jobless claims at 227 versus 230 expected. Lower than expected jobless claims, 227 versus 230 expected. And the markets like it. Look at the market go up here. Continuing claims showed up at 1.903 versus 1.89 expected. So yeah, 1.903. So higher than expected continuing claims, lower than expected initial. Markets have gone up, and come all the way back down here. We'll put this data up on screen again. U.S. initial claims 227 versus 230. Pretty small. Mostly flat. Not a huge miss either way. I'll put this data up on screen. So we got jobless claims. We also have flash manufacturing PMI data coming out. All right, so we put this up on screen. It's a little bit smaller here. There we go. All right, so we got some sideways action, though. I think it's probably skewed a little bit today because of the huge drops that we've seen. We've had some big drops. Look at us hold here at this 50 level. We've had some big drops over the last hour or so. That's kind of skewed the volatility, I think. Yeah, so yields. Let's see what bonds continue to do. All right, so we are heading up, though, on this report. So we have rebounded back up here. Yeah, we did have the jobless claims unemployment report today. We got about 2,000 here for it, so I appreciate the love. Thanks so much, guys. And remember, we cover all the stuff going on in markets live. So we cover Jobless claims. It's been a slower week for economic reports. Today, we still have manufacturing and services PMI flash data coming out at 9:45 today. So be ready for that. We will cover that. Yeah, we're going to cover market open live as well as it happens here too, so just stick around. We do get some stuff going though, so. Nasdaq starting to creep up. What do you guys think? You think we'll get good action, bad action for the rest of the day? Let me end this poll. So we did a poll here live. Let me go ahead and end this. Look at yields though, spiking up again here, which is interesting. Look at yields right now. Hold on. Look at yields spiking up again. Hit 4.625% at their highs today. Nasdaq starting to rebound back up though. Let's see. Here's that 80 level. I'd like 100 honestly here. All right, so I'm going to end this poll and we're going to do another poll. Does the market trend up or down today? Up, down, sideways. It's going to be the three options here. And again, guys, if you haven't already, check out Top Step. We do this live for free every weekday morning right here. We don't sell a course, don't sell a service, don't claim to be experts. Everything we do here is free. So subscribe, hit the like button. We appreciate it. Thanks so much. Also, guys, remember, if you want to day trade, almost all day traders lose. This is only my second plug in hours. I've done 2 plugs today. So don't cry too much about it. But most day traders lose their first couple accounts. If you fund your own account day trading, you're probably going to lose thousands of dollars if you fund thousands of dollars, because most day traders lose. And frankly, that's true regardless of where you go, including Top Step. But again, it's a lot cheaper to lose on Top Step. If you pass the test, they give you a 50K demo for the base one. If you can make 3K without losing 2K, a 3-to-2 ratio, they fund you 50K, 90% split. As long as you follow their rules, they fund you 50K, 90% split. And they pay out hundreds of millions and fund thousands. It's the most legit one in the world. This is the perfect environment to learn day trading. You're risking something, much less than most people have to risk if they fund their own account. If you fail, you're out $50 a month for the base one. If you pass it, 90% split, 50K funded account, they've paid out hundreds of millions. If you use TopStepX, 0 commission, and they opened up API access to this as well. So a lot of cool stuff with this, a lot of cool stuff. But again, top 3 most biased trader of all time ever in the world. Not an investment professional. I'm not liable. If you lose, always make your own assessment. Trade smart. We are spiking up to that 1100 level that we wanted here. Let's see if this helps markets. Markets have kind of reacted pretty favorably to this report, though. So we're hitting that 1100 level that we wanted. Let's see if it does anything to it. All right, so there's 11s. Retracing back down some. Consolidating at it now. I'm kind of interested in maybe attacking it. Gold's falling down some, which shows strength maybe in markets. Retracement. So we're starting to see some rebounds in markets here, though. Let's see if these hold. It's a big green candle. I mean, look, we're starting to head up. Maybe getting a delayed reaction. Bond yields are starting to fade back down a little bit now, too. See if the market continues to rip. I mean, the jobless claims report was not that good. It came in at 227 versus 230, and continuing claims were higher than expected here. So it wasn't really that good. But we're over 2100, so I'm not going to mess with it. Oh, I'm sorry. The disclaimer's still up. My bad, guys. That's my fault. I know. I keep forgetting. I put it up. I keep forgetting to put it down. Sorry, chat. My bad. I'm trying over here. I'm trying to manage it. I got this big screen. You'd think I'd see that. All right. We're over 21 ones here. I'm just gonna wait. We're green on the day. We're green on our we're green on our funded account today. I'm fired. Okay, that's fair. You guys can watch a blank screen. Yeah, I don't know what the markets are going to do. We'll see. Flash crash. I don't know, man. Markets have kind of come all the way back up here. So, like, look. I got to get rid of some of these. But the market dipped a lot and then rebounded all the way back up. We're kind of at this neutral level here, though. So here's a level at 115s or so. It's a previous support or resistance area. So we could trend flat here. We might go sideways. A lot of stuff's bouncing back, though. Amazon technically green now. NVIDIA is... Let me see what NVIDIA is at. Bond yields came down a good bit. They're at 4.61%, though, so that's good. NVIDIA testing that previous closing price right here. Yeah, we got a little mini cup and handle here. All right, so now we have flash and services PMI as the next report, and the market did like the jobless claims report. A little bit lower than expected, but that's good. Look at the 5-minute chart. Markets had 1, 2, 3, 4, 5, 6, 7 green candles in a row on a 1-minute chart. So looks a little bit better there on that end. We'll see if it continues this hold though. Strong bounce back though. NASDAQ still running. Still going back. Let's see if it continues. Green candles. Look at this. Let's zoom in here. BP initiates sale of Castrol lubricants according to Reuters, so that's going on. Google's still rebounding back up. It's at 172s. What can you use gold bars for? Yeah, I mean, I like gold as an investment, but like I have no qualms about gold being some type of incredibly like useful tool. Like some people try to act like if the world ever goes crazy, that gold is going to be some type of valuable thing. What can you use gold for? It's a shiny rock. Yeah, technology, sure, but it's not. The price of gold is not reflected by its use in technology. It's just not. If that was the case, gold would be much, much less. And so gold is valuable simply because it's been a point of value throughout the history of the world. But in terms of its actual use, it's not as big as a lot of people try to make it out to be in terms of use and argument for its use. I like it though, by the way. It's one of the best inflation hedges long term. Short term, it's a wild thing. But long term, It's a good inflation hedge for the most part. Although I wouldn't get mad at you if you didn't like it either, though. I think it depends on how you want to watch it. Market's kind of getting sideways here. Oh, I think I have some gold. Again, I think gold's one of the best inflation hedges, you know, or hedges against other stuff too. I think like I'm talking about if stuff gets so bad that it's gonna pivot to what's the most useful thing. So like food, medicines, stuff like that. In that regard, gold's gonna be relatively useless. You know, think The Last of Us. Honestly, I like The Last of Us series. People are giving that show so much hate. I like it, honestly. I thought it was good. I didn't play the game, though, so maybe I'm not a purist in that regard, and maybe if I did play the game, I'd be less interested. VIX is coming down. Markets are coming back up. We got the 200 exponential right here at 1150s, though, or at 150s, I should say. NVIDIA just tapped the volume-weighted average price. The 200 exponentials at 132s. Game is better. Yeah, I believe that. Yeah, we're getting close enough to I mean, we're close enough to the 200 exponential. I'm wondering if we're going to continue in some type of bullish trend or if we're going to start fading back down and follow the big moving averages and the volume weighted average price trends. NVIDIA's right there, though. Bond yields have flattened out a little bit. Yeah, like people act like Bitcoin's not valuable. I think they missed the point of it, though. Bitcoin's valuable because of its safety. Like, it's like a PayPal that can't be hacked, that you can send money anywhere for any reason without red tape. You know, I mean, it's more than that, but like, there's some valuable aspects of it for sure. And the world is going digital, right? Like, the money's going digital, regardless of whether people want it to or not. This is very easy to see. Money's going digital. So blockchain technology can basically act like its own bank, and that's a valuable thing, I think. But people are going to obviously disagree, and some might agree. Who knows? But yeah. In the end, blockchain technology is basically like having your own bank, and that's what they use it for. Yeah, and there's a scarcity aspect to it. There's a finite amount of Bitcoin that can ultimately be mined through it, and so over long periods of time. And that's what Michael Saylor understands, is that over a long period of time, it's going to become more and more valuable because of the scarcity / finite aspect of it. Most of the people that don't like it are just people who missed out on it because it's been one of the single best performing assets in terms of appreciation over the last 20 years, 10 years, 15 years. And so most of the people that are unhappy or that criticize it regularly are usually people who have doubted it and missed out on it, and they're in turn confirmation biased wants, you know, them to think that, hey, it's not valuable at all, I didn't miss out on anything, guys. You know, that's what it really is. All right, NASDAQ hitting that 200 EMA here. Let's see if it holds. I'm curious. Big move at the 200 exponential, though. Look at NVIDIA still rise back up. It became valuable as soon as BLK and Citadel started buying. I think it was valuable pretty... I mean, it depends on your definition of value. I think it was useful and valuable way before that. You know? That's me personally. I think it was worth a lot before that. All right, so we're sitting right at the 200 exponential here. NVIDIA is what's driving this. Bond yields are decreasing. We get a little bit more optimism and stuff. ECB minutes review. A lot of members would have been comfortable with a deeper cut. Yeah, Google's flying up to 173s almost right now. That's been pretty good. Pretty good look for it. Now we're retesting that 200 exponential. NVIDIA's starting to fall a little bit though. Let's see if it holds here. Looks like it wants to come back over the 200 exponential. So that's kind of what I'm keeping an eye on. All right, we broke over the 200 exponential. Bond yield's still coming down, so bond yield's getting close to green for 10 years. Or red, I should say, but red is good. We're under 4.6% now, which is right around the red to green level that I'm showing on TNX here. So bond yield's coming down. It's still ripping up higher here. And markets, again, we have had so many green candles. 1, 2, 3, 4, 5, 6, 7, 8. 8 green candles in a row now. So a big surge. Yeah, I think throughout time people tend to fear technology. It's pretty standard. When the automobile came out, people said people will never use it. When Amazon came out, people said nobody will ever buy anything online on the interwebs. ... You know what I mean? Like, this is just normal. It's the older people typically fear it the most. And that's pretty standard. Again, most older people I know fear Bitcoin and crypto, and that's kind of how it goes. But again, regardless of whether they want it or not, currencies are going digital. That's objectively, like, that's very self-evidently and obviously true over the past 20 years, 15 years. It's been even more so the later the years go on. But people fear technology is pretty normal. Yeah, market's all the way back up over the 200 exponential, basically rebound all the way back from this big slump. Kind of volatile few days here, man, so just be careful. We are going to be day trading live at the open, so stick around. We are going to be day trading live at the opening bell. Yeah, big green action here. Okay, so some breaking news that just happened. The U.S. is not going to be putting pennies into circulation by early next year. Businesses will need to start rounding up or down to the nearest 5 cents. U.S. Treasury said in a statement, a penny currently costs about 4 cents to make. Cutting production is to save. So yeah, they're not going to be using pennies anymore. It's going to round up to nickels now, it looks like. So, interesting. Pennies are going bye-bye. Probably understandable. And again, as I said, cough, cough, cough. Currencies are moving. They're just different now. I don't like pennies either. They're useless. They're a waste of time and space. Although, if they kept up with copper prices, pennies would be a lot more valuable right now, as would nickels if they kept up with nickel prices, as would quarters if they kept up with silver prices, as would everything else if they kept up with the standards that they were meant for. So, yeah. Yeah, well, pennies are no longer copper. Canada got rid of the penny in 2012. I've lived in Canada. I remember Canada's money. They have loonies and toonies, $1 and $2 coins, which I think is very useful. Honestly, the U.S. should do it more often. But still, all right, guys, we got 30 minutes left. Oh well, the gas companies are making their money, studios, so that doesn't matter. Yeah, the gas companies, they're going to make their money regardless. All right, guys, remember, in about 45 minutes, 48 minutes to be exact, we have... we have flash services and manufacturing PMI. So be ready. And market's just churning up here too. I am not a robot. All right, still push it up here. Again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13 green candles confirmed in a row here. Chat, we're waiting right now. I tend to think eventually we're going to start coming down, but we've gone up so much now. See if we get a pullback to like the 200 EMA or something. Wow, look at this spike. Squeeze. We're hitting some levels though, I think might be interesting here. Unless we got some news that just came out. Let me make sure. Tesla reportedly lost spot as Europe's top EV seller. Let's see if we got something. Yikes, dude. Something just happened again. There's a big move here, chat. Big green candle. Something going on. All right, so we had Russian Federation, C-Bank, reserves. Belgian leading indicator. UK's ONS is reportedly going to consider small adjustments to CPI. Let's see what bond yields are doing. Whoa. Look, we have had so many green candles in a row, bro. So many. Kind of crazy. Pennies are going out, that's true. Effective funds rates 4.33%. It still stayed the same. So we've gone up a lot. Still surging back up here. We finally got a little bit of a red candle here, and it took a long time to get it, but we'll see if we actually close. We have 30 seconds here to see. If this one actually pushes up, it's going to be another green candle in a row. Yeah, now it's technically green. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 green candles in a row in the NASDAQ here. Yeah, very strange morning, honestly. Like a huge V. Look at the V shape. And there's not really any justifiable news for this either. Like there's not, the jobless claims report came out. It was all good. We've had some decreases in bond yields. Like this is all bond yield related, I think. Look at bond yields come back down, but it's still very strange. Not really any recent meaning for it. Huge, big move up, move down, volatile. Yeah, just volatile. Now we're finally starting to get a red candle here. We're green on our funded account. And we're not really trying to mess with this too much here. All right, so G7 says economic policy uncertainty has declined. Increase in international low-value shipments calls for analysts of market concentration. See, it says the login here. Quick. Yeah, so now we're finally coming down. A lot of this is NVIDIA related too. Bond yields are now, TNX is now technically red. Google's now dipping down some too here. All right, still rip it up. We're at 221s in the NASDAQ here, 221K. Still rip it up in markets, though. We have about 25 minutes into the opening bell chat. Dollar index is up. How many contracts can you use on Top Step? It depends. You could use 5 mini contracts and I think up to 50 micro contracts since it's the same correlation. Yeah, government's going to stop circulating pennies. Do we have any earnings today? Let me see. Yeah, we had some earnings. Okay, cool. We'll put that up. We'll do our morning earnings recap. We had BJ's, Analog Devices. Yeah, so we had BJ's, Analog Devices, which is ADI, Advanced Auto Parts, TD Group, Ralph Lauren. So retail company still, Williams Sonoma, LSPD, ARQQ. NASDAQ's kind of fallen short a little bit. We finally had some red 1-minute candles, but it took a long time. Microsoft's green, Amazon's green. I'm sitting tight and waiting here. Trying to see how often some of these show. Trying to just wait for some good setups here. Some of these algos I'm building though. Here, let me change this. Hold on. Okay. Yeah, so like look at this. So here's some algos I'm building. This is kind of why I'm waiting to trade right now. I'm waiting to see. I can't guarantee it's gonna work if it does show up. But just to show you guys this, like look. Like look at some of this. So here is a 5-minute one. Right? It doesn't show up a lot, but look at this sell signal. It actually came in a little bit, you know, boom. Sell signal here. Nice little follow through. Dip. Yeah, we can keep going back here. Look, sell signal here. Nice little follow through. Buy signal here. This one probably didn't work, but most of these have, so I can't really knock it. Like, look, if we look deeper into this, like, look at this. It's catching it right when the trend starts to the downside. Right when the trend starts to the downside, you know? And as long as you're smart with profit taking, like, there's a lot of edge. It doesn't work every time, but like, look, sell, boom. This one didn't work, but the sell signal there did. This one worked. This one worked. This one worked. This one worked. These kind of mixed. Like this one worked a little bit. This one didn't. This one didn't. This one did. This one definitely did. This one did. This one is kind of neutral on whether it worked or not. It's a little high, but this one did. And this is, again, the 5-minute examples, which I've seen are typically better. Follow through, bounce. This one maybe didn't work, but this one didn't. This one definitely did. This one did. These two did. This one did. This one didn't, but this one did. This one did. This one did. This one's kind of mixed. This one did. So most of the time these work. Here's the 1-minute examples though on a 1-minute chart. They're a little bit, I don't know, man. Some of these are even better, but it depends on when we're looking at it. Like if we zoom all the way into this and look at short-term price action here. Like these look pretty legit. Like look, follow through, dip, follow through. So this one didn't, this one did. So that's like 1 out of, how many is this? 1, 2, 3, 4, 5. 1 out of 5 didn't work. This one maybe you could say did or didn't. Probably not, I guess. But look at this one. This one did. This one did. This one did. This one did. So all 4 of these worked. This one did as well. This one did. This one did. This one did. So the 1 minute is almost more accurate than the 5 minute. Interesting. But we're still building it. We're still testing it. I can't guarantee anything. They happened the candle afterwards, Lissandro. So they happen like the very next candle. So if it triggers the next candle, the alert will show up. All right, so we're dipping down here. We're at 22.2s. Yeah, pennies getting out of circulation. Who? Fred Durstback. Does he got a backwards fitted red baseball cap? All right, so we're up here. We're still waiting, chat. I'm waiting on some good momentum, to be honest. We got 15 minutes until the market open. 15 minutes. Let's day trade. All right, so now we're kind of dipping down. I'm watching the 200 exponential. I'm worried we're going to get like a longer term choppy trend though, to be honest here. Let's see if we do. Powell says he won't cut rates until unemployment goes up. Unemployment went down, so no rate cuts. All right, now we're coming all the way back down. I'm still kind of waiting, though. I'm trying to be more selective with stuff. Yeah, I mean, we're seeing a big V-shaped recovery today after big drops earlier in the morning. So a lot of stuff's freaked markets out early this morning, bond yield specifically. At this point, though, I'm just kind of sitting tight waiting. We got flash services and manufacturing data coming out showing strength or weakness in manufacturing is what this is. It drops in 30 minutes. Still coming down some here. So we're kind of in this choppy, like, sideways range. So now we're hitting the 200 exponential again. Ugh. So if we start heading back up some, or if we keep coming down and just gonna go sideways for the rest of the day. Spilling coffee. All right, bond yields are spiking up a little bit now. It looks like almost. Kind of unknown here. We're at the 200 EMA. See if we hold at this spot. Just depends on if we go sideways, big range sideways, or we actually maintain a trend here. Powell's got a hard job. It looks like the market's also following NVIDIA a lot. Like, it seems to be following NVIDIA. Like, look, NVIDIA moves up big, pulls back, bounces. Market moves up, pulls back, bounces. So I think NVIDIA is kind of leading the way. I know Google's been up a lot today also. We don't have too much time until the open. We're getting close. We got the bounce right there at the 200 EMA. I'm still kind of waiting for some movement here. MicroStrategy did an offering, didn't they? Or they did something like that. Let me see. This morning. So president's economic agenda, on the U.S. president's economic agenda, FBN's Gasparino says, quote, with the bond market tanking and yields spiking, investors I speak to say the administration should be on notice about its broader economic agenda. It's not tax cuts that are scaring the bond vigilantes. They're backed in because this is merely an extension of the president's tax policy. But more to the point, the ruction is a combination of still aggressive spending and tax increases in the form of tariffs that could have the opposite effect of most tax increases in the short run, producing inflation because of its price shock characteristics before they slow growth. To be sure, the president was left with a mess from the overspending from the previous years, particularly the fiscal time left in the form of massive short-term borrowing to suppress interest rates and get the other president elected, the his competitor elected, but the tariff plan could negate any supply side push that the president's deregulation and tax cuts would spur. Then you're left with a still bloated spending plan with weak growth. That's a sell signal for bonds, I'm told. And this is FBN's Gasparino saying this. I'm not saying I agree or disagree. We're just kind of covering that news here. Well, yeah, the 10-year Treasury bond's super high. It's over 4.6%. It's over 4.5% right now. I don't know if it's over 4.6. Yeah, actually, it's at 4.59%. It's still at a very high level here, a very high level. We got 6 minutes into the open, though, chat. Let's see. And again, guys, we are trading on Top Step today. You can join me. Link is attached to the top of the chat. If you complain about me posting it, I'm just going to ban you. This is the third plug in 2.5 hours. So, I mean, you'll be all right if we plug it, you know, once an hour. That seems pretty reasonable to me. But if you want to check out, if you want to learn to day trade, just don't fund your own account. It makes no sense to. It really doesn't. Like, if you get good enough, you can withdraw and fund your own account. Or if you get good enough learning on Top Step, then you could fund your own account. What I wouldn't do is put up 5, 10, 20, 30 grand of my own money and try to day trade with that. Makes no sense in the beginning. Almost all day traders lose money, regardless of people trying to sell you courses, regardless of what they tell you. Most day traders lose. And so try on Top Step. It makes perfect sense. I'm biased because I get paid by them, but genuinely useful for traders. But again, guys, as you guys know, with my famous disclaimer, can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. Understand all these rules. Confirm it all with them. Can't guarantee anything. I'm biased. Top 3 most biased ever. Yeah, market's kind of whippy today. Big upward moves, big downward moves. This follows yesterday. Again, look at the sell-off we got yesterday on the 20-year Treasury auction. This sell-off here was from Treasuries, right? Like this sell-off here was, they had at 1 o'clock yesterday, they had the Treasury auction that happened. That is what's driving most of this. That's why the market is mostly down. Or that's why the market dropped yesterday, is because of that specifically. You know, weak demand for 20-year bonds has caused a big sell-off in markets and made yields spike and the market sell off. So that's kind of what happened yesterday. Now leading into today, we've had a really big range but sideways trend. Like we've basically been sideways since the big drops yesterday. Like this is the market since then. We've gone up big. We had a really tight trend for a little while. We dropped a lot this morning on more weak demand for bond news, yields spiking up, and then since jobless claims came out really this morning, we had a huge spike back up and then a dip back down, and that's where we are today, leading into the opening bell in 3 minutes. We will see what happens. We got 3 minutes. Let's see. Today, Lambo. Tomorrow. No, Brent, I'm not going to publish. I don't know what I'm going to do with my indicator, to be honest. I'm building it in the background. You know. All right, guys. We got T-minus 2 minutes until the opening bell. We'll see what we get. Be safe. And again, if you want to check out Top Step, link is pinned at the top of the chat. You can also find it in the description. Hey, what's up, Tiny? Again, the problem with my indicators this morning, I call it trend power, but it hasn't showed up since yesterday and on a 5-minute chart. It usually shows up more often than this, but there's some days where I guess where it's too choppy. You know, but like, look at that. Boom. This one worked too. On a 1-minute chart, it's even more impressive though. So like on a 1-minute chart, we got even more, you know, it's even more impressive. So. And I think a lot of the market is getting led by Nvidia as well here, to be honest. All right, guys, here we go. We are right ahead of the opening bell. 20 seconds. 20 seconds. Five, 4, 3, 2, 1. Let's go. Big upward swing at the opening bell. Let's see if it holds. Might not. Nvidia spiking up though. Looks good. You never know though. Don't copy me. Not an investment professional. Ralph Lauren executive says assessing additional pricing actions for fiscal year 25 and 26 to mitigate the potential impact of evolving tariffs, according to a conference call. All right, so we're heading up a little bit at the open. Let's see if we hold now. Remember, we got flash manufacturing and service PMI at 945. We're going to be covering that, of course. I'm just looking for a trend right now if we can get one. Nvidia's had a nice little move up. Although the opening bell can be volatile and whippy. We're going to let a couple minutes play out first. Look at this green action. Nice movement. Huge movement here, chat. Look at the green surge. Wow. Honestly, dude, if my indicator showed up again, look at this. And it worked. So we caught that one, actually. So interesting, nonetheless. But doesn't mean it's perfect. But we do have flash services and manufacturing data showing up live today. So we actually watched that one live, though. So I was curious to see. I just wanted to watch it and see if it worked. But yeah, market just had a big red candle. I want to make sure this isn't catalyst related or news related, where it's just kind of trapping traders. It's possible it is. Here we go. More dips to the 200 exponential here. Big red showing up in markets. Google breaking down, Nvidia falling down too. Big red. Weakness. Look at the red show up. Deep red. And what's interesting is this one got a 5-minute indicator showing up here. It's deep red. All right, Google's bouncing back a little bit though, so we are seeing some strength in some stuff though. But the market has been whippy. Deep red showing up. Let me see if there's any justification. In 10 minutes, we have flash data. At 9:45. What a spike. So I'm trying to schedule. Let me see. There it is. Dude, look at how volatile this market is, bro. What is going on in this market, bro? This market is going up big, down big. I'm not really trying to trade my funded account in this, dude. This is choppy. It's a big range and it's sideways. So y'all just be careful. Yesterday was a little bit better than this, but we had a small green day yesterday. It wasn't big. I don't want to get caught in the whip of this. We gotta wait for this range to break out, I think, right now. Whiplash giving me a headache, yeah. Tax bill's been passed since like 5 a.m. this morning. So yeah, the tax bill's been done. If we spike up again now after dropping back down, it's even weirder price action. Like it's just eating accounts. I mean, the trend looks weak to me right now. We're testing the bottom of the range, but it's also been very whippy. And so I think if you're going to trade, micros is the way. Just to scale in and out easier and keep the risk small. Yeah, look at Nvidia. So Nvidia hit this previous close. And then bounced right off of it. ECB's member says the current rate level is not restrictive. Yeah, it is so back and forth right now, man. We got a little flag looking form though. If we reject the 200 EMA, we might jump into some stuff here, but we got to just kind of wait for that, I think. Yeah, there's a little bit of a rejection. It's not bad. Nvidia rejecting here. This could pull stuff down. Google started to get higher though. So is Microsoft. I'm trying to see if we go weak, but there goes Nvidia going weak. That's better. This is a very difficult price action, I think, to make money in, though. Amazon's starting to fight back, too. Not really getting any super favorable stuff for me. We're in the middle of the range, though. We break over some levels. Let's talk about them. We got 225s right here. That might signal something. And then we got the bottom of this recent range down here at 115s or so. Bitcoin still getting close to all-time highs, though. Google's what's really ripping up today. I guess after their I.O. event, we're getting some optimism, maybe. Nvidia's starting to fall. Nvidia just cracked lows. That's what's dragging the market down recently here. But then the market just kind of got bought right back up. So very whippy right now, guys. Just be careful. Not easy to make money in this. Kind of boring, not boring, but difficult, I would say. I think it's the opposite of boring, but back and forth. All right, we got flash PMI in 45 seconds. 45 seconds. Let's see what this does. This might actually move stuff. We'll see. All right, let's see. Here we go. We got 1 minute. Or we got 30 seconds, chat. 30 seconds. $20. Services expected at 51. Manufacturing expected at 50. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, 1. And here's the report. Let's see what it shows. Still waiting for it to come out. We have initially a positive reaction here. So global manufacturing showed 52.3 stronger manufacturing than expected versus 50 expected. Services showed 52 versus 50 expected. So a stronger services and manufacturing than expected. All right, so we initially got a pop on this. And now we're heading back down a little bit, but it's such a choppy day. Yesterday was better. Yeah, I mean, it was stronger than expected. It showed stronger services and manufacturing than expected. But the market's not really moving in what I would describe as a sensical way. It's kind of going up and down and up and down and up and down. I guess it is sensical. Unknown right now. In theory, this would make the market go up, but I also think that right now we don't freaking know what the market wants. And so I think it's hard to make money. I think the market wants rate cuts to a certain extent, but also we're in like a stagflation environment where we fear economic weakness as well. So I think we're kind of like middle range. And leading into tomorrow and next week is even busier week with NVIDIA earnings. We got GDP data, PCE data next week. So a whole bunch of stuff going on next week. We'll try to trade this, but I'm going to be trading micros. Wait, hold on. All right, guys. Sorry, talking to my wife. All right, so market's basically completely flat since the opening bell, but volatile nonetheless. But well, let's see if the market comes back down or what it does here, man. It is so choppy right now. I don't even think the market knows what to do. We got Google push it up. Amazon kind of flat and boring though. services and manufacturing data was a little bit better though. It wasn't like the worst it's ever been. A little bit stronger than expected, which optimistic look at stuff, services, manufacturing. I think the market wants rate cuts though, so maybe the market kind of wants economic weakness in some ways. It's hard to tell. What a huge rip. I don't know. It looks huge right now. It's actually pretty small. Top of the range now. Let's see if we actually do something or we break down. Hey, buddy. How you doing? Here, not right now. I know. Here, Jack, stop trying to sell me on games. You can't play right now. Alright, guys. Alright, my son's out here trying to sell me on why I should play video games at 8:50 in the morning, Texas time. Gotta tell him no. It's too early. Alright, will we break out of this range now, chat? We'll see. We're at the top. Or will we consolidate sideways? I could maybe short a little piece of this up here. See if we start to break out of something. I'll take one micro contract here. The range is big, but and again, we might just be getting dumped here. I'm trying to attack 225s, but we got one micro contract. I don't really want to take too much here. This is my first real trade of the day. I mean, I'm green on the day right now, but not really green now after this one. We'll try one more micro contract here, and then that's it. Again, I haven't really liked the price action. I think the price action has been much more kind of like up and down than it normally is. And so I've been trying to limit my trades on my funded account. Although we did get the opening range breakout going on right now. A lot of stuff just started ripping out. Let me make sure there's no reason for this. Real quick. So flash data came out. We don't really have any 10 a.m. data. Like we made a little bit yesterday in this thing, but I'm gonna cut this here. Getting over the highs. I don't want to lose too much in either of these accounts, man. It's really difficult. This morning. I see you, Ricky. Have a good day, brother. Well, it's weird flat. Oh, we got yeah, we got home sales at 10. That might move stuff. But we had like a symmetrical triangle breakout that was pretty good. We'll stick around for new home sales, and then we'll cut it. Ooh. See if we hold that 225 level now. I don't think new home sales are really going to do anything anyway, though. Like, even my indicators have been very whippy. I'm starting to realize, like, you target these not at the open. Google up to 177s. Yeah, thank you for the music. I appreciate it. Home sales have basically no impact. Almost nothing. All right, look at Palantir. Palantir up to 124s right now. Look at that bounce right there at this level. 225s. Dogs. And to my indicator's credit, you know, we faked out a couple times with this one. But this last one worked and followed through. So. All right, guys, is it new home sales? Let me see what it is. Hold on. It is existing home sales expected at 4.15 million. 4.15 million. They drop in about 1 minute even now. 1 minute even. Still very green right now. Look at this. All right, 20 seconds. 20 seconds. Bruce. Somebody's got to be here. Here, guys, existing home sales just came out. They showed up at 4 million versus 4.1 million expected. Less than expected existing home sales. 4 million versus 4.15 million expected. Less than expected. Minus 0.5% month over month. Last time they showed up at minus 6%. So a little bit less of a decline, but still a decline at 4 million versus 4.15 million. My apologies about the dog. Sorry. Sometimes you just gotta tell your dog to be quiet, and he'll listen. I love you, Bruce, but be quiet, bro. Enough, dude. Stop whining. All right, so the market's not really doing too much here. No, I love my dog. He's a great dog, honestly. They're both really sweet dogs. Honestly, you would be surprised at how well Bruce swims. Bruce is a water dog. Like, we go swimming. We've been swimming every day now. I can throw this ball. It's a tire on a rope. It's a roped tire. I could throw this thing really, really high up in the air, and it will come all the way down and hit the bottom of the pool. Bruce will jump in, like dive into the pool, swim to the bottom of the pool, grab this tire, and then swim back to shore and get out the pool. My other dog, Rosie, she'll do the same thing, or she'll fetch the ball out of the pool, but she's not diving. Bruce will literally head first dive to the bottom of the pool, grab the ball, swim back up, and he freaking loves the water. Like, more than any dog I've ever seen. More than a lot of retrievers, which is interesting because he's a shepherd. I have a video of it. Like, look, hold on. I'll find it. Give me a second here. I'll show you. Oh, I'm sorry. I'm sitting here talking to myself, guys. My bad here. Oh, dude, I gotta, like, I got too much stuff going on my monitor. I'm telling Bruce to be quiet, but yeah, new home sales data. It showed up. How long have I been muted? I don't know. New home sales data, slightly weaker than expected, although not as weak as last time where it came in at minus 6%. It should have been minus 0.5%. Again, if you want to learn to day trade, try Top Step. Do not fund your own account. If you do, you'll probably lose whatever you put into your account. And so in that regard, most day traders lose, including here. It's a lot cheaper to lose on Top Step most of the time in general. You know, generalized, understand what that means. There's always outliers, but most day traders lose. And so it only makes sense to learn in this structured environment. Tons of great resources. The base one's $50 a month. If you fail, it's not the end of the world. If you pass it, you get a 50K funded account, 90% split, and taking it teaches you how to trade. And if you're good enough, once you're funded, you can withdraw, fund your own account. Once you're funded, you got a 90% split. You get to keep your first 10K in profit. And if you use Top Step X, 0 commission, no PDT rule. I'll put the link up one more time. World's most biased trader of all time ever in the world. Don't copy me. Can't guarantee anything. I love you all. You'll have a great day. Be safe. Again, we'll see what bond yields are doing tomorrow. And hey, be good. Yeah, well, I mean, JD, let's talk about it. So JD says don't use your money. Instead, spend money with this company. With this company, it's $50 a month for the base one. Depositing, in order to day trade, depositing into your own account and being able to trade freely, get around the PDT rule, you're going to need 25 grand to do it in stocks. In futures, you'll need thousands and thousands of dollars. And so, like, you genuinely think it's better to fund your own account trading? Objectively, I don't think it is. But I guess it's not the most objective thing. I guess it's opinionated. It's all love here, guys. Hey, I love you all. Have a great day. I don't know where the video of my dog is. I'd have to find it, bro. I don't know where it's at. I got one of Bruce. Hold on. Let me see if I can find it. I'll be real quick. Real quick. Let me search. Let me search. Hold on. Yeah, I don't know where it's at. I'll have to find it. I don't know where it's at. Hey, I love you all. You'll have a great day. I'll see you guys later. Tomorrow. Markets close Monday. Kind of. Y'all have a great day.